Hello. Good afternoon, Dr. Ma, ladies and gentlemen. Welcome back to this afternoon sessions at the Hong Kong Green Finance Association Third Annual Forum on Financing Carbon Neutrality in Asia. My name is Tracy Wong Harris, Vice President, Deputy Secretary General at the Hong Kong Green Finance Association. I'm also the Head of Sustainable Finance for Greater China, North Asia at Standard Chartered. It's my absolute pleasure to be your MC for this afternoon. So this morning, we have heard about the carbon market, the transition investing, and also climate risk associated to it. Now, this afternoon, we have an exciting lineup. We will start with Ashley for keynotes, and then with 3 report review, followed by 2 panel discussion. So welcome back from lunch to my guests at the back. Please be seated. And then, so let's start. Without further ado, let me pass the floor to Ashley Alder, CEO of SFC, for his keynote. Thank you. Let's start.
I just want to check you can hear me okay.
Thank you, Ashley.
Good, thank you very much. Okay, look, I've been allocated, I think, for this keynote around 10 minutes. I'm going to start with an apology. I'll probably exceed that a little, not least because I did catch bits and pieces of the panels this morning. And just a couple of reflections just to start off with before I get into kind of the regulatory part of it from my perspective. And these are personal comments. The first one of which is I heard a conversation around effectively ESG scoring and considerations, and in particular the relationship between climate, between broader environmental, social and governance. And there was a reference, I think, to EV vehicles and the ways in which material for batteries is extracted, or minerals, from Africa. And all I'd say around that is that although we are talking about net zero targets of 2050, 2060, 2070, depending on which country we're referring to, the reality is, if you look at the sort of science-based approach, we have got to make a difference this decade. Otherwise, we will be looking at temperature rises in excess of 2% and potentially above that. And that implies that there are some pretty difficult trade-offs to be made. I think it's, given that climate is pervasive, as someone I think mentioned in one of the panels, given that it is global and it's systemic and it's urgent, I think ultimately there will need to be trade-offs between those aspects of, say, sustainability which are social, which are often quite political, and those which are more science-based and then trending into the climate, which is the urgent issue. So I do think there needs to be a conversation around those trade-offs and where priorities lie. It's rough, I know, but actually I think it needs to happen. So just getting to really to what I want to focus on today, and actually, I mean, I've kind of approached this as, you know, what's Hong Kong's role around all of this. I would, again, preface this by saying, when we're dealing with sustainable finance, and when we're dealing with, in particular, the climate aspect of that, this isn't primarily about how centres make more money or are more successful than other centres, because it's a collective action problem, ultimately. But if you approach this from a collective action perspective and you focus on content rather than PR and spin, you will find that you will end up being a very, very important hub for climate finance. There's no doubt about it, but you need to focus on the content. And in that context, what I want to talk about is aspects of climate finance, of course, and then as part of that, get on to sort of carbon markets. Now, basically, I think there are 2 areas where we need to move forward very rapidly. One is on the corporate real economy reporting front, and that's around the kind of the slogan of you can't manage what you can't measure. And the second is around the market mechanisms, they're not the only mechanisms, of course, there's technology and others, but the market mechanisms which should be directed to helping achieve net zero targets. So starting with the first about reporting, I think it's been recognized for actually some years now, not just in the last 18 months or the last 2 years or so, but quite a long time, that to build investor trust in sustainability disclosures and reporting, it is absolutely critical. And of course, there have been long-standing complaints about incomplete, inconsistent, and unreliable company-level data amidst a multiplicity of standards and different efforts across the NGO space, across other private sector organizations, all I think with, all have good intentions, all are trying to sort of move the dial, but the problem is that there is so much that is extremely difficult for end users of financial services or corporates to get their heads around this. Now, I was at COP26, and the reason I was there was to announce alongside the IFRS Foundation the formation of the International Sustainability Standards Board. Now, I chair IOSCO, and IOSCO has effectively decided that this really is the only credible initiative to get to consistent and comparable disclosures from corporates on a global level. And of course, the goal is pretty straightforward, which is a single global comprehensive corporate sustainability reporting standard, starting with climate. And it's basically achieving this through not only a convergence of existing standards, such as the SASB standards and others, but also, quite remarkably, a merger of the standard setters themselves. And at COP, it was announced that MOUs have been signed with a view to that merger actually happening. Now, that really is aimed at removing complexity and noise from the system, recognizing that even a single standard will be inevitably complex in itself. But that's really what it's about. The other thing that we recognize that that's all very well because it's a set of objectives. But this is an area of sustainable finance where there's a lot of talk, there's a lot of activity, but is it really moving the dial? And I think in order for it to do so, that we just need to understand there's a lot of work ahead. And as I mentioned earlier, it has to be done really, really quickly. So next steps involve around initially the global baseline climate standard, involve an evaluation by, and I think Elaine mentioned this earlier on in a previous panel, an evaluation of the usefulness of the standard that emerges around climate for investment decisions. And from our perspective as regulators, its usefulness, it's linked, but its usefulness to eliminate greenwashing, because we do see greenwashing as an associated virtue signaling, as something that does threaten the sustainable finance effort. And given where given the stakes here around climate, that needs to be dealt with. And we want to make sure, like normal accounting standards, because of course the ISSB, the new standards board, sits alongside the accounting standards board. We want to wait for that endorsement to happen in the second half of next year. Normally an accounting standard can take years to be produced and finalized. This is going to be much faster because the urgency is so great. I'd also mention something, I'm not sure if it's been mentioned this morning, but it's also really important. Effectively, what ISSB is doing is picking up the baton from TCFD. TCFD is a framework. The ISSB standards are meant to be an equivalent of accounting standards, but obviously with a forward-looking, intense forward-looking aspect to them, because it's around climate. This is not history, is not helpful around this. So scenario analysis, transition, physical risk, etc. But what it should have in common with accounting standards is assurance. In other words, the equivalent of audit. So the other thing that we are now starting to work on, and we need to accelerate, is the question of how do you build third-party independent assurance frameworks in order to effectively audit corporate level reporting in this area. And then finally, I would say just a couple of things around this. It's all very well to have an international standard. It's always a challenge for an international standard to be embedded in local frameworks. We have Europe, we have the United States now working on a standard. They both have acknowledged actually that this needs to be interoperable with a global standard, because the global standard, quite apart from anything else, it should be a very powerful tool when it comes to Asia, and Asia is the key to the climate crisis, as others may have mentioned. So we need to make sure that firstly, we have worked out how to embed a standard locally. So in Hong Kong, we're already talking obviously to the exchange, we're talking to the HKICPA, the Financial Reporting Council, and also critically, it needs to be interoperable with mainland disclosure regimes, because after all, our financial market footprint is basically, yes, it's Hong Kong, but it connects global capital with mainland business in large part. So that needs to be interoperable. It should not be a fragmented approach. If it's fragmented, then the information and the data is then yet that is disclosed is less and less useful for end users. So that's really what I want to say about that ISSB project, other than to say it's a high priority for the SFC this year and then going into next year. Second, I just wanted to talk about this question of market-based proposals to encourage investment flows into transition and to net zero, because the disclosure standards, the reporting standards, that's a measurement. It's simple as that. It measures both impact in terms of emissions footprints, scope 1, 2, and 3, and it also measures climate risk, and that's principally around scenario analysis, although there are other metrics. That's what it's doing. It's essential to have that to start thinking about how do you actually make a difference and how investment flows are redirected. And we know that the volume that needs to be invested is absolutely huge. Estimates I've read recently involve numbers like 12 trillion US dollars in Asia and at least 6.5 trillion for China. So these are kind of, they're mind-boggling numbers, but given the scale of the problem, they're understandable. And with all of that, in relation to action taken to achieve net zero, taking into account the more credible disclosures, I do think that from a regulator's perspective and a market's perspective, carbon pricing is absolutely critical, and carbon trading as a key policy tool to motivate investments for transition. The mainland's own emissions trading system, its own ETS, is expected to, quite shortly to become the world's largest. Again, not surprisingly, given the relative size of the mainland economy, the relative size of its emissions footprint, when you look at this on a global level. So that basically means that the mainland is the most significant place, China as a whole, for the overall pace and magnitude of reductions worldwide. Now, what's the relevance of Hong Kong to all of that? And it's a good question to ask, actually, because Hong Kong itself, as a geographical entity, is quite rightly setting its own targets domestically, and they all contribute, but they are a relatively minor component of the overall solution on a global scale. But I do think that Hong Kong is, in fact, as often as the case, actually, in a unique position to put in place an international carbon market structure effectively around its gateway status, which would then operate to help the whole of China achieve a carbon neutrality goal. Now, a few components around that, which we are currently thinking about. The first of which is a credible or strong carbon market needs to be driven by consistent and reliable data, especially on emissions. And on that front, both the exchange and both the International Sustainability Standards Board are obviously looking at, quite rightly, the question of corporate disclosures of both of scope 1, 2, and 3 greenhouse gas emissions. Now, secondly, there was a breakthrough after many years at COP26 on Article 6 of the Paris Agreement, which is all around international cooperation on carbon markets. Now, it's early days, but I think that breakthrough is relevant to Hong Kong, especially as a gateway. Thirdly, the carbon market opportunities in the Greater Bay Area are absolutely clear. Guangzhou's carbon market is now the world's third largest and is the most active pilot in China beyond the central power sector, cap and trade schemes. And also, I think of relevance to carbon markets is that the mainland's own vast geographical footprint makes it a potentially huge source of carbon capture and removal projects of various types. So what does that mean for Hong Kong, really? So I think that done correctly and with the right sort of intelligent sort of design parameters, we can provide a natural bridge or construct a natural bridge for the opportunities principally originating in mainland China, both for supporting the compliance market, the ETS, but also, I think as was discussed this morning, voluntary carbon markets. And as part of this, it's absolutely essential to build trust within the system. It's obvious to us that credible offset credits go hand in hand with credible disclosure. And ultimately, as in other areas of disclosure in financial markets, ultimately that boils down to both the industry doing the right thing, but also regulators getting involved. And actually, this is a topic in which, one of the first ever, on multiple occasions, I've been asked by market participants for more regulation. Normally, we're asked for less, but this is the only one where we've asked for more. And I do think that basically Hong Kong has an inbuilt advantage because its existing world-class regulatory standards can be scalable to cover both reporting under the new ISSB corporate level, real economy level reporting standards, and also cross-border carbon markets. And with both of those in place, reporting and a credible carbon market, I can see that multinationals and the financial sector could participate in what ultimately will be one of the world's largest onshore carbon markets, which is China. Now, I co-chair together with the HKMA, the cross-agency group we set up nearly 2 years ago, looking across the green finance spectrum. And the carbon market work stream, which is chaired by the SFC and the stock exchange, is conducting a feasibility assessment. I actually do think this is quite difficult because ultimately Hong Kong does not have and cannot really create, because it's too small, its own domestic carbon market. We need to look at this on a layered basis. We need to look at the basics around how carbon markets can be set up on a international level, i.e., the basics of credible offsets and the basics of the way in which we might be able to interact with onshore compliance markets. That's the first level. The second level is that if we're going to act as a bridge, we need to think very, very carefully about market structure. And we need to think very, very carefully, and this comes down to the question of potentially a more aligned global carbon price. We need to think very carefully about the economic model through which we're able to credibly connect multinationals and financial institutions with reliable offset projects in China as well as with national and regional ETS schemes, and how they may interact with global capital and multinationals, including multinationals, of course, that do business in China. So I think there's a lot to do. Myself, I think that the design phase is going to be relatively difficult but achievable. I think we need to do it because I think we have an inbuilt advantage to value add to the whole sort of project around both disclosure, redirecting capital, or incentivizing redirection, as well as the trading angle, which is much more to do with sort of direct reduction, incentives around that. I think we should be an early adopter of the ISSB reporting standards. I think we should be extremely active in working out how we can build an assurance component around all of that, whether we're working with the auditors or others. And ultimately, I think that we can be, as we are in other respects, the place where global capital flows can intersect with huge emissions reductions requirements in China via cross-border carbon markets, if well designed. So I'll leave it there. There's a heck of a lot more to talk about here. We've been looking at this very closely, but in the interest of time, I'll leave it here, and back to you, Tracy.
Thank you, Ashley. Thank you so much. I think you summarized our morning sessions very well. With the vast amounts of capital required for managing Asia transitions and the role of carbon market, carbon pricing and the key role for Hong Kong to play. So looking forward to hearing a lot more for this afternoon session. And thank you very much for joining us, Ashley. Thank you.
Thanks very much.
Thank you.